Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, it emerged from the rubble of the 2008 financial crisis. Brexit forced it to shelve its IPO, and then came coronavirus. But amid a fintech funding frenzy, property lender LendInvest earlier this year did finally become a publicly traded company. The co-founder and executive chairman is Christian Faes, who joins me now. Great to see you again, Christian.
Yeah, thanks, Elliot. It's great to be talking with you. I'm very glad that I finally got the invite from Laurent.
I think it was always there. It must have got lost in the post. So how are you holding up there in London?
Yeah, good. Yeah, it's good. I was in Australia for a few months over the Christmas period for a family matter. But I've now escaped the Australian bubble and back in the midst of the real world in London. So yeah, everything's good. Sort of life is opening up again, which is great.
Yeah, I remember you sharing some of the fun and games you were having in your quarantine hotel. But back to LendInvest, just remind me and our viewers kind of how the LendInvest business model works, because I think for now you're still very much focused on particular niches of the property lending market. It's not like you lend to the whole market, at least not yet.
Yeah, that's right. I mean, we essentially see ourselves as an asset manager focused on property finance in the UK. And we do sort of focused on what would be perceived as kind of specialist areas of the market. So short-term bridging and development finance and also buy-to-let. But they're not that niche. I mean, I think the existing TAM of the products we're in is about £42 billion a year. But also we have ambitions to go across the whole of the market and essentially be the largest mortgage lender in the UK in due course. We've got a little way to go, but we're definitely on our way.
Yeah, I guess those are pretty big niches. And what kind of returns are you getting your investors? What kind of rates are you charging people? How do you kind of compare? I guess you're lending money where banks wouldn't be lending money, so it's not like you're competing with them with like-for-like products.
No, what's interesting, I mean, we do compete with some of the smaller banks in some of those products like buy-to-let. In terms of the returns we give investors, it's changed over time. I mean, as a lot of marketplace businesses did, a number of years ago, we had high net worth investors and kind of like a different focus with our investor base. As we've scaled and grown over time, it's now very much institutional. So largely our investors in the loans that we originate is kind of like the JP Morgans of the world, HSBC, Citibank, National Australia Bank. I mean, I would say pretty much every institution out there has an appetite for our loans, but we do have a large institutional base and they're very happy with the returns they get with the products that we originate for them.
And as we discussed, you went public earlier this year. Congratulations for that. It wasn't the splashiest of IPOs. You didn't raise a huge amount of money with the greatest of respect. But I mean, is that just because you didn't need the money? Because I know you've been profitable for quite some time.
Yeah, so we did. It was a relatively small IPO. I mean, I think we ended up raising just £40 million of primary capital. I think when we raised that, we had about 60 million in the bank already. So I think kind of the need for capital was probably less the focus and more about being a listed business. We've always been vocal about wanting to be a public business. So I think when it sort of came time to actually do it, we just thought we'd do pretty low profile and just get the job done. And we're happy to get it done just before the summer window here in the UK on the London Stock Exchange. So, we're happy with that. It's a ridiculous process when you actually go through it, and kind of it's quite a grind. And I can really understand the excitement and interest, I guess, around SPACs because you spend 13 years building your business and then you get 60 minutes to pitch it to a generalist investor. And so, it's kind of, it's a real grind. So we're glad to have sort of closed that chapter and move on with, building the business as a public company.
And has life changed for LendInvest or for yourself? You spending more time on the golf course or something?
No, not really. I mean, I'm exec chair. I was exec chair before. Clearly, there's more sort of institutional rigor around the business. So there's certain things that we're not allowed to say now around the business, which is a bit of a constraint on myself because I like to sort of, talk about the ambition of the business. But not a lot has changed. I mean, we had listed retail bonds before we sort of did the IPO of the company. So we kind of operated and pretended internally we were a listed business before we were. So don't think there's a huge change. Obviously, all the staff have equity in the business and there's kind of like, watching the share price, but it's traded well. And I think, I think we've set the business up for success in that regard. So yeah, not a huge amount has changed.
And if I'm not mistaken, you're on the alternative investment market, AIM. Why did you not go for the main market? Were there kind of reasons in terms of the amount of free float or governance or things like that?
Yeah, so that's a really good question. We Thought AIM was an appropriate market, mainly for timing, I guess, from our perspective. So we were keen to get a deal done quickly when we sort of made the decision to do it. We felt if we went for the main market, it'd probably be a longer process. So we pushed the button on in April and we listed in July. So it was a very condensed time frame. We kind of feel like the AIM market is suited to us in terms of it is for growth businesses. I was reading an article the other day, and I love the quote. They're kind of saying, that the main market is for yesterday's companies, and AIM is for tomorrow's winners. And I think that's certainly where we see ourselves. And I think we're surprised. Actually, most investors don't really care. Actually, and most people wouldn't even know that that's where we are. I think in the private markets there is a perception around AIM being sort of the junior market and whatever. But from our perspective, it was a good match for us.
Right, I'm sure Deliveroo, Wise, and others might object to that characterization of the main London market.
Well, no, and they're hugely successful as well. Yeah, I mean, clearly. But it's interesting, TransferWise I think that's a huge success story for UK fintech. But it's interesting that they did a direct listing. So I think there is kind of a recognition that in some respects that process is strained, I would say.
Right. Well, we'll come back to that a little bit later because I want to talk more about you right now. Because, of course, plenty of businesses come a cropper during crises, but many actually start when the night is darkest. You started right off the back of the financial crisis in 2008. What on earth were you thinking? Because you had a pretty good life as a lawyer and you kind of wash up on UK shores and set up your own company in the wake of the biggest financial crisis in a generation.
Yeah, I mean, I think I was just incredibly naive, is the truth of it. But yeah, look, it was not the most ideal time to be setting up a mortgage lender in 2008, 2009, which was the initial genesis of the business. So that was interesting. But I think it kind of taught us to fight. We've pretty much had to scrap for every penny we ever got. And we sort of were very focused on being a profitable business very early. So we bootstrapped the business. As a result, my co-founder and I still, even as a listed business, we own about 60% of the company, and it's pretty tightly held. So I think the struggle benefited us in the long term, and also became part of the DNA of the business, just to be really scrappy and to fight hard to build a business.
Right, but I think it was quite challenging. I mean, I think you had like one kind of lucky break, some random guy from Eastern Europe or something kind of came along and was your first customer. Can you tell me perhaps a little bit more about that, how you first kind of got your break and able to see that the business was going to be viable?
Yeah, sure. I mean, I think it was it wasn't really one lucky break, I'd say. I mean, we spent a lot of time looking for an investor in the early days. 2008, 2009 was cold calling investors was pretty soul destroying sort of experience. Eventually found an investor that was happy to invest. I guess the reality was, though, you're giving them all of the margin, and you're really just building a business off the back of their money for sure, but also not really building something that's sustainable from a financial perspective. There's just, I mean, clearly, I love the saying, the harder you work, the luckier you get, and I think in some respects you just keep at it, which is what we did, and eventually we got some lucky breaks. I kind of feel like. I mean, you've got to have a bit of luck along the way to sort of get our business to where we've got it, and I think that's true for any sort of success story.
Right, and I think, and as you were saying, VCs and potential investors weren't particularly interested at the time, which enabled you to kind of be more scrappy and to kind of keep hold of more of the company. I mean, what was it that they just didn't see your vision, what you were trying to build? Because I know it's not like you had this great big network here in the UK coming from Australia. So what was it that didn't entice them?
Yeah, I mean, I landed in the UK, didn't know that many people, 2008. Fortunately, met my co-founder through a mutual friend, and he was kind of crazy enough to come on the journey from the start, I guess. I don't think it was as much as VCs didn't see it or get it, although I definitely would say that generally across the piece. With lending businesses, I think is a specialty that's maybe more suited to private equity or the listed space than VC in many respects. But we just weren't focused on raising capital. So we didn't raise any external capital for the first 7 years of building the business. And I don't think before that we probably would have spent no more than 5 minutes even thinking about it. It was always just about how many loans can we do? How do we get the funding? How do we sort of make enough money to keep the lights on? Maybe employ someone. What are they going to do? How are they going to add value? The kind of, I guess, the more traditional way of building a business, but clearly always focused on being high growth. And unfortunately, we did get great investors. So Atomico has been a hugely supportive VC investor, hugely helpful in terms of helping us scale a business when they did come on board. Some way through our journey. GP Bullhound, Tiger, a small investor out of the US, big investor but small investment us out of the US, and so on. So over time, we were able to get investors on board, but I kind of we were just much more focused on building the business than speaking with investors, which is kind of, then when you get to the public markets, now you've clearly got to speak to investors and build the profile, and that's kind of a new start for the journey for us in that regard.
Right. All right. Well, look, Christian, don't go away because we're going to take a very quick break, after which we're going to continue our conversation with LendInvest co-founder and executive chairman, Christian Faes. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Now, Christian, I've got a few more questions for you, so let's talk about the kind of fintech and UK fintech ecosystem in more detail. And I think after your IPO, LendInvest is valued around about £290 million, $400 million, which is kind of, again, with the greatest of respect, small beer versus the likes of, Nubank or Revolut or other, big fintechs out there. What do you make of fintech valuations right now?
Yeah, well, it's good. I'm actually glad you asked that question because we look at our valuation. I mean, we're on like a 2x last year's revenue, or 15x last year's EBITDA for a business that's growing 50% per annum. So I think kind of when you get to the public markets, that's kind of it's not necessarily reflective. Clearly, there's some businesses like TransferWise and so on that can sustain a huge valuation in the public markets. As a sort of fintech, but I think that for certain sectors that perhaps are less well understood, like lending and perhaps our business, I think there's huge upside. Although clearly I'm not talking about share prices and stuff because I'm not allowed to do that. But I would say that you do look at some of the other valuations out there and kind of scratch your head. I mean, but at the same time, I think it's great as well. Like a business like Revolut being built out of the UK and raising such huge amounts of money, it's clearly a rocket ship business and is being hugely successful. And I think it is a leading light for the sector. I mean, the UK likes to claim to be the center of the universe for fintech, but the reality is there's not that many listed fintech businesses in the UK. We've had LendInvest, before that PensionBee and TransferWise this year, and then you'd have to go back a couple of years to Funding Circle before that, and they had a bit of a challenge journey as well. So the listed universe of fintechs in the UK is not that big. So I think the more companies that do come to market and we start to build out that universe, we can perhaps get more support for the sector in the public markets. And even I look at like the US, clearly there's a huge number of listed fintechs. Even got to say, in Australia, there's a large number of listed fintechs and huge success stories like Afterpay. Well, I guess that's now part of Square, but or will be. I think there's work to be done in the UK. The government is clearly aware of this, and they're doing things to try and change the listing rules, which I think will have a positive impact. Yeah.
Yeah, I wanted to ask you about the UK because, as well as chairing LendInvest, I know you're quite involved in supporting UK fintechs in general, and I think you sit on a government advisory panel. Post-Brexit, what would you say the UK needs to do to maintain its place at the top table, or perhaps near the top table, of global fintechs?
Yeah, so I think there's a lot of things it needs to do, and it's not things that they're not aware of in terms of the UK government. Like so, I'm involved in a few government advisory roles in relation to fintech. There was the Khalifa Review, which I think was kind of a landmark moment for UK fintech. That was released 3 or 4 months ago. There was a lot of expectation around that. It's being delivered. It's a hugely ambitious review. It outlines a whole range of things that the government should be recommendations asking, I guess, the government to take on board around attracting talent, allowing, sort of opening up markets with trade deals and things. And there's a lot of great work being done there through to, tax incentives. It's a very ambitious report, and there's a lot in there. I guess now it's up to the UK government to do something about that. So I think the listing rules have been taken up, and they seem to be, working their way through. And there's hope around that, but there's a lot of work to be done, and I think there's a big ambitious roadmap now. Now it's time for delivery of that.
Right, and just briefly, Christian, obviously, post Brexit, I speak to some, non-UK born fintech founders who are in London. They often say, if Brexit, was happening now, I wouldn't be setting up my fintech here. How can the UK change narrative, or is it just, the damage has been done, we just have to get on and deal with the situation at hand?
I think in some respects that we just have to get on with it. It's an interesting comment for people to say that, and I've thought the same myself. If I was landing in the UK now, would I be with this? Is this the place to set up a fintech business? I think the reality is there's a lot of choices for founders now, and it's a global competitive market, and there's lots of choices. You hear like Miami being the next Silicon Valley, trying to attract talent. There's things like Dubai and Singapore. There's lots of countries that are doing really interesting things, and actually people are pretty mobile these days. I mean, I could certainly go to anywhere pretty much and set up another business. I don't have to be here, but my network is here now, and I think the government's very supportive of fintech. So I think it is a great place to come and to set up a fintech business. But I think that's not necessarily a given. I think there's work that has to be done, and it's not it's not a reigning crown that will last forever. They've got to continue to fight for that.
Okay. Well, look, Christian, I'm afraid that's all we've got time for. So I just really want to thank Christian Faes, co-founder and chairman of LendInvest, for joining me today for this really fascinating conversation. And that's for you, Christian. All right. Well, look, I'm going to be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.